that some of the presidential candidates have. These may change over time or as we get closer to the election, but just to give you a good idea, where they stand, because obviously taxes are a big part of everybody's life. It's a pretty big expense. So depending on how you feel about taxes in general, this will kind of give you a clue as to where the candidates are thinking, that they want to shape the tax policy for their coming term. Now, generally our tax system is a progressive tax system, meaning the more you make, the more they take. So if you earn $50,000, you might pay one rate. If you're at $500,000, you progressively will pay a higher rate. So it's not a flat rate. A flat rate would be a regressive tax where you pay the same percent regardless of your income. And so, just generally speaking, Democrats have historically had higher rates typically targeted at the wealthy, and a lot of those higher rates are used to fund various programs that benefit the lower and middle class citizens. Republicans, on the other hand, typically have lower rates with the thought that the lower rate will spur the economy, and so there's just different views on how they're going to bring revenue in and what that revenue is going to pay for. So this chart that I passed out, what I did was the top line is current law, and then for each of the candidates, basically the 5 that we think we have left. But what their view is on that, if they've even released anything at all. And I just want to go through a few of these. Today, I don't know how much I'm going to hit on the business or other, but probably just focus on the individual side of things. So starting off, the ordinary income tax rates. Right now, as I mentioned, we have a progressive tax system, so as your income goes up, you start paying these higher rates. The rates now range from 10%, they go all the way up to 39.6%. Now, Clinton has proposed adding 4% to the top rate, which is over $5 million, so it's a pretty big number. So at that rate, you'd be at 43.6%. Sanders, he probably has the highest tax rate proposed of anybody. He's going to add 4 new rates, 37, 43, 48, and 52%. So in addition to adding these rates, these are going to be rates on top of the current rates we have, plus adding 2.2% to all the other rates. So the lowest rate would now be 12.2%, next rate would be 17.2%, and so on. Ted Cruz, he's proposing a flat tax of 10%, offsetting that a little bit with the increased standard deduction up to $10,000 per filer. Right now it's around $4,000. So the flat tax would be an example of a regressive tax that's going to probably favor the wealthy. Mark Rubio, it's got 3 brackets as his proposal, 15, 25, and 35. And the top rate begins at $150,000 and $300,000 if you're married filing a joint return. So anything over those 2 numbers would be taxed at a 35% rate under Rubio's plan. Trump, he's proposing 4 tax brackets, a 0, 10, 20, and 25, and his top bracket's going to start at the same place where Rubio did. On the itemized deduction side, currently, there's deductions for medical expenses, taxes, interest, casualty losses, and there's some miscellaneous category of deductions you can take as well. Hillary Clinton is proposing to cap the benefit at 28%. So what that means is if you're in the highest rate, let's say you're paying a 35 or 39.6% rate, and you had a $1,000 deduction, that benefits you by $396. So it's your tax deduction times your tax rate is your benefit. So Clinton is proposing to cap that benefit at 28%, which just means if you're in a bracket higher than 28%, you're going to be limited on the benefit you're going to get from that itemized deduction. For anybody below that, you're just going to be where we are now. Bernie Sanders, again, is capping the benefit at 28% and eliminating the phase out. Right now, if your itemized deductions total $20,000, that's what you get, but if your income goes past certain levels, they start to eat away at that $20,000 deduction, and that's the phase out. to eliminate all itemized deductions with the exception of charitable deductions and mortgage interest. And, that's partially from the fact that he is proposing this flat tax. So the flat tax would generally be designed to, obviously if you make $50,000, you pay $5,000 in tax. It's a pretty simple system, but I guess he is going to leave a few deductions in. A lot of the tax proposals that have had a flat tax in the past have just said, we're going to eliminate all deductions, credits, just simplify everything, have a flat tax. Usually those proposals require a tax rate much higher than 10% to make that work, but looks like that's what he's proposing. Rubio, same as Cruz in terms of getting rid of itemized deductions, but he is going to keep the charitable and mortgage interest, and he's going to cap the interest deduction at $300,000 of acquisition debt. So that means if you buy a house and your cost of your house is $300,000 or less, the mortgage interest that you pay on that house is going to be deductible. If you had a house that was $500,000, then a portion of that mortgage interest would not be deductible because the acquisition debt exceeded the $300,000. Trump proposes to phase out all deductions except charitable and mortgage. Right now, the phase out to a degree is unaffected by the type of deduction you have. And so this would say, well, we're going to do that phase out because your income's too high, but we're not going to phase out any of these other deductions, which are the charitable and the mortgage interest. So we'll let you keep those in full regardless of how high your income is. But if you have other types of deductions, which would be taxes, medical expenses, miscellaneous deductions, those would be phased out. The next category are tax credits. I didn't list all the tax credits under current law just because there's so many, but just broad categories. There's credits for retirement, for education, health. There's the earned income credit, dependent care credit, energy credits. There's child tax credits. There's probably credits for almost anything you can think of. Clinton is proposing to add a new $1,200 caregiver credit. Sanders hasn't really had a specific proposal on this. Ted Cruz is proposing to eliminate all credits except the earned income credit and the child tax credit. He's also proposing to expand the earned income credit by 20%. Again, with the flat tax, typically credits and deductions aren't there. He is keeping a few around. Rubio is proposing a $2,500 child credit to offset payroll taxes. So right now there's a child tax credit if you've got a kid under 17 and your income is below certain levels, you get a $1,000 credit per child. And so the proposal is to increase that to another $2,500. Donald Trump doesn't have any specific tax credits he's proposing. AMT, so this is alternative minimum tax, and it's been a subject of debate quite a bit because it's a pretty complicated tax structure. And so what you've got your normal income tax that you figure, and then you've got your alternative tax. So you take your normal income tax and you make a few adjustments to that normal income tax, and you see if you owe this alternative tax. And so the adjustments are things like certain types of tax exempt interest. So you think they'd normally be tax free, but there's certain types that are actually taxable for AMT purposes. Any sort of tax deduction you take, if you've got a bunch of itemized deductions and they involve taxes like real estate taxes, state income taxes, those things are added back and adjusted. And if your alternative minimum tax exceeds your regular tax, then you pay the larger of the two taxes. So not only is it, a complicated tax, it was really designed so that high income taxpayers would pay some minimum level of tax. That's why they call it the alternative minimum tax. It hasn't always worked out that way, and so there have been proposals to make reforms to that. And you can see that 4 of the 5 candidates are proposing to eliminate the alternative minimum tax. Clinton's the only one that is somewhat keeping it in place, and she is proposing a minimum rate of 30% on income greater than $1 million. So it's really, that's what it was designed for, is to tax the wealthy because they may have had several types of deductions and credits that reduce their regular income. And so this alternative tax was a way to say, we're going to make you pay at least some level of tax. hasn't necessarily worked out that way, so her proposal is to make sure that if you have over $1 million, you're paying some minimum level of tax, and in her case, 30% is what she's got it at. This last category for investment income, so capital gains or dividends. Right now there's a different rate, so on the first column is the ordinary rates. This is things like wage income, interest income. If you have business income, things like that, you pay ordinary income tax rates based on that schedule. If you have certain types of investment income, capital gains and dividends, you pay a preferred rate, which is lower than the normal rate. And those preferred rates are 0, 15, 20, and can get as high as 23.8%. So Clinton's proposal is to have an additional 4% tax on income over $1 million, but she's also proposing to increase rate on investments held less than 6 years to between 24 and 39.6%. So right now, for capital gains, if you hold it less than a year, it's a short-term gain, that's taxed as an ordinary rate. If you hold it for more than a year, it's taxed as a long-term capital gain, and you get these preferential rates. So her proposal is to break it up even further and say, well, between 1 and 6, it's going to be a medium term. And for that medium term, we're not going to give you the special rate. It's not necessarily going to be the ordinary rate. It's going to be somewhere in between. So it's just an extra way to raise revenue and complicate things. Bernie Sanders, he's proposing ordinary rates for household incomes over $250,000. So if you're in that income bracket, you're not going to get these preferred rates. Right now, the maximum you would pay regardless of your income level on investment income is 23.8. If that went through, you could potentially pay 39.6, or if it goes through with Bernie Sanders, up to 52% even on investment income. Ted Cruz, the investments, he would actually lower the rate to 10%. Rubio would lower it to a 0% rate, and Donald Trump would eliminate the net investment income tax. And the net investment income tax is a 3.8% tax on investment income where you have more than $200,000 or $250,000 of income. So that's where we get the 23.8 on the top rate. So there are times where if your income level is high enough, you pay this additional 3.8% tax. It would be eliminated under Trump's plan. So I got a few more minutes, but before I go on to the next, is there any questions about this? Or
based on this information, which one of these tax plans is better for the poor, is better for the middle class, and better for the rich?
Well, good question. Think about it. I mean, normally your rates are going to be lower on the Republican side, but you know, if you're making $20,000 a year and you say, oh, 10% rate, that sounds really good. Well, that's $2,000 out of your pocket. I mean, that's a lot tougher, you know, to come up with $2,000. Whereas under the current tax structure or the Democrats' plans, there's probably enough in deductions and credits where somebody making $20,000 may pay little or no taxes after you figure out, even if it's a standard deduction, exemptions, you know, earned income credit, you know, things like that. So it's hard to answer that without, you know, getting specific. But at the lowest end, probably one of the Democratic plans is probably more beneficial. If you're somewhere in the middle, then that may depend on, you know, what sort of, if you have a lot of investment income, you know, you're paying 0% rate on that, that's pretty good. You know, if you're retired, you know, your income's coming from a lot of investment sources, you know, that would be helpful to you. It's too difficult to answer that as a general thing.